All right. Welcome, everyone. This is to episode 2 of the Investors Corner with Crystal and Aneel. How you doing, Crystal?
Hey, I'm doing awesome. I'm doing really good. A little tired today. Just got back from traveling, but excited to be here with you.
Right. Some great feedback from our first inaugural podcast, right? It was a good intro, and we're looking forward to this. And we made it to episode 2. We have some guests lined up they'll talk about, and today we actually dive into it, right? And so I'm excited for episode 2 and keeping this going. I think we had a lot of good energy, and
For sure.
we'll get the hang of this and we'll keep going, right?
Yeah.
All right. So I'm excited today because this is your hat. This is your expertise. This is what we connected on, and we dropped a little bit of a tease about this aspect of investing at our last pod, right? And so today, what I wanted to do is for us to zero in on a niche of real estate investing. It's a niche, but it's a very lucrative area of investment in real estate. What it is, it's investing in real estate notes, right? And so I want to explore how folks can profit from this type of very unique. I touched about it. I didn't know anything about notes. It's been around for a long time, but I think it's a very under hyped type of real estate investment, right? And so, or vehicle. So I wanted to start with you because you are the expert, my mentor in real estate notes, right? So I wanted to give our listeners and our viewers, and we're going to be talking a lot about note investing throughout this podcast. I think it's the premise of your business and things that we're working on. But so I wanted to take today to really provide an introduction to folks and a broad overview of what real estate notes are, the types of real estate notes, and then finish up with how you can cash flow from investing in these real estate notes. Okay, so to
Sounds
set the
great.
stage there, right? So let's start with, what is a real estate note? What's a note?
Yeah, so real estate note is very simple. It's basically a contract, an agreement between another entity or two people, whatever it may be, that basically is saying that you're going to pay X amount for X amount of intervals. And so as a note, you become the lender, and which I love, where there's so many benefits to note investing, but
Right.
You become the JP Morgan Chase, you become the Wells Fargo, you become the bank.
When you actually invest to acquire the note. But from a high level,
Right.
a note is just a promise to pay.
That's right.
Right? The real estate note is, the definition is a legal document representing a loan agreement secured by real estate, right?
Right.
When a borrower promises to pay back the lender. Now, can you highlight the difference between there's two types of notes, right? And when it comes to real estate, can you highlight the difference between, and it's kind of common sense in the name, but I want you to go into the differences, can you highlight the difference between a performing note and a non-performing note?
Yeah, so again, very simple. On a performing note, it usually means it's seasoned. So it is performing where they're paying regularly. So the borrower is making their payments regularly. So when we're originating notes, I sell first lien performing notes. Or there's non-performing notes where they stop paying. They're not paying. They're delinquent.
Right. Okay.
As well.
Right. So right from the name. So the types of notes that you can acquire are performing notes, like Crystal mentioned. That's where the borrower is in good standing. They're seasoned, meaning that they've made consecutive payments. Then there is non-performing notes. From the name, they're defaulted. They're non-performing notes. So those are the types of notes. Those are the different forms of notes. And then, of course,
and Aneel, I was just going to say there's when you're talking about notes, I mean, there's obviously real estate notes. There's going to be residential. There's going to be land notes that are created. There's also commercial as well, which commercial is a whole nother beast, but that's big as well. And so when you're looking at purchasing notes, there's just all different types that you can become the lender.
Right. So essentially, any property, the collateral, it could be a residential collateral, a small family home. The collateral can be in a note that's being borrowed on, right? It can be a commercial property, which is then a commercial mortgage note, right? And then if it's just land, then of course the collateral is land, and it's a land purchase or land contract note, so to say, right? So I want to now dive into the potential return for investors from notes, and why, compared to, someone can say, hey, why would I invest in a note when I can buy the real estate myself and own it? You're still owning it, but why is it better than other forms of real estate investment, and what's the potential return for investors in acquiring a note and investing in mortgage notes?
Yeah, so I'll just hit on a few reasons why I love notes. And first is the passive income stream. I mean, we're all looking at monthly cash flow, right? Mm-hmm. I heard it was a quote from Warren Buffett said, and I'm just paraphrasing, but basically, if you don't figure out a way to make money while you sleep, then you're going to work until you die. And that really stuck with me. And so that's where notes come in. It's a passive monthly income stream that where you become the lender and your borrowers are making the regular payments to you. And so it provides a consistent and predictable income stream for you. Just like last week we were talking about turning your liabilities or using your assets to pay for your liabilities. Well, what it gets to do is you get to use this stream of income to pay down your expenses and whatever that may be, your car, your mortgage, things like that you can use to have financial freedom.
So let's pin on that a little bit, right? So let's say I'm an investor and I'm looking to acquire a note, right? What essentially does that entail? Do I have to manage the property? I'm essentially coming in and take now the borrower that's making the payments to, let's say, a bank or someone else, now they're making those payments to me. Is there an intermediary? Can you kind of clarify, as an investor, when I'm buying these notes, what am I getting out of it? Like, what are my responsibilities, and what is my, going back to return? How does that work? How do I step in and become? How does it change from the borrower paying the bank or whoever gave them the loan to then just a random investor that invests?
Yeah, so there's clearly paperwork involved, but that's the beauty of it. That's where you're not dealing with property management. You're not dealing with maintenance, toilets, things like that. You're not dealing directly with the tenants either. And so think about, you're just receiving as an investor the monthly payments without the emergency, text from your renters or for whatever it may be. And so how we originate our notes, we go through, and I'll just touch on this briefly, is that we go through title company, we do surveying. We also go through RMLO and third-party servicing company. So with our buyers, though, we go through a full vetting process, and an RMLO is basically just a loan originator. And all they're doing is verifying that the buyer can pay their mortgage. And so it takes a lot of that headache out. Right,
because you're vetting it. And you said a word, paper. right?
Right.
Essentially at the core of this is you're trading, buying and selling
Yep.
paper, which entitles you to receive whatever loan or monthly payments that are based off that promissory or loan that's been generated or originated, as you said,
Right.
right?
Right. And
So
yeah.
go ahead.
I was going to say, well, the beauty of that is you have also geographic flexibility. So
Oh wow,
you
okay.
can do that anywhere where you're just trading that paper, which is huge.
Right.
That's another huge benefit.
And you hit a great point, is for an investor that does not want to deal with property management, does not want to deal with the tenants, does not want to deal with the day-to-day managing of a property, evictions, for things like that. Uh, this is an ideal investment. You're
Yeah.
collecting that mailbox. You're collecting that mailbox money from these loans that are coming in. Now, you also touched on. So I love that. That's kind of the key thing, is
Well,
I think
let
a
me,
lot of folks want that passive investment, right? And so
yeah.
not being active in the real estate management is a big point. Go ahead.
Yeah, I think there's a little bit delay or something in maybe our in hearing you and stuff. But I was just going to share really quickly a real life situation that my husband and I had, where we had a renter that skipped out right after Christmas. Because they don't want to pay their January payment. Well, what happened is we had a big freeze, and because they skipped out, pipes busted and the entire place flooded. And so we weren't aware of that until we went to go collect payment. And so that became a big mess. And thousands and thousands and thousands of dollars later, that we're having to deal with that, find a new renter. But just that situation alone really shifted our focus from going from rentals to owner financing, because we saw that as we're owner financing, they're taking ownership of the property. Again, you're hands off, you're just collecting the payments as a lender would.
Yeah, and you're right. And you talked a little bit about what I've learned is the strength of the note. The strength of the note is all about the buyer, right? And so the more due diligence and more information and background that you have on the buyer or the borrower, in this case, the stronger the note is. So talk a little bit about, and that's one point. What makes a note attractive to an investor? What are some things they look for in notes that is attractive? Not just, let's talk about the return. Like I said, the borrower, some things that investors look for, and that can characteristics of a healthy note, of a note that is investable. I mean, you can invest in small notes and short notes as well, right?
Sure.
So give some characteristics of a solid note.
Yeah, so a solid note is the vetting process with the borrower. Like you said, for us, we do debt to income ratio. We do a credit score. We look through that and to determine what's going to be a good borrower or not. Also, the amount down and your risk. That will help your risk, because we require, depending on their credit score, depending on their DTI, will depend on how much down payment that they're going to make. So then their loan to value, then that changes the loan to value, but keeping your loan to value at a certain place as well, which that's going to help on note buying and make a note strong. You also want to know the area as well, and where you're purchasing. So you don't want to just go out and buy a note anywhere. You want to, again, do your due diligence on location as well. So with our personal land notes that we originate, we have land that is outside of the city, but still close and has conveniences to the city. So we're never further out than 45 minutes to an hour from the city. But it's still an area with good schools, good location. You're still close to a bigger city as well.
Okay. That's terrific. So what else? Talk to me also about what's the risk in note investing? right? You're
There,
taking you have a borrower
yeah.
that has to pay you payments. You're taking on the loan. What's the risk in note investment? There's got to be some risk in any investment, correct?
Well, I think just like any other investment that you're taking on, there will be risk, but it's just a reduced risk. You compared to a physical real estate investment as opposed to the paper. Again, you don't have all of the well, with a note, you can also do partial. So you may not have to put the whole amount up front either. And there you could have first lien position, you can have second lien position. We won't get into all that today.
Okay,
but
we'll save the technicals for another episode for sure.
Yeah. But I was just going to say, if there was a default, what's great is then you get that land or property back. So, and the great thing about here in Texas, Oklahoma, Arkansas, where we're doing land, if someone was to default, then we have to foreclose. Well, land value keeps going up and we turn around and resell it and find another buyer. But that's worst case scenario for us.
Right. And so the biggest risk that could happen, or the worst thing that could happen, is you have to take actual possession of the home or the land or the home, right? It's the
right.
Because listen, these are investments that are backed by real estate, right? Now, so in some cases, I'll throw this out there. There could be a scenario where you acquire a non-performing note at a very steep discount because you're getting,
right.
Correct me if I'm wrong, Chris, those non-performing notes, and in a lot of cases, that's a lot. There's a lot more upside in those, right?
Correct.
The non-performing notes you can acquire at a discount. So give me an example give me the numbers on this one. So we talk about it. Let's say it's a $200,000 house. What's at a discounted non-performing note? What is that usually acquired at?
I mean, you can get it at 50%. You can get it at less than that. I mean, it really depends. 60%. I mean, I've known of notes that you can get it even less. So it's kind of across the board. Saying that though, if you can weather it out on the non-performing note, that's great. You're going to get a strong return as well. Okay. And so when purchasing a non-performing note, a lot of times also the goal is not to kick that borrower out, right? It's to work something out with them because you want to provide stability for them. Now, obviously, there are those times that you may have to go through that process of foreclosing, but the whole goal is to work something out with that borrower. And so even on non-performing, there's a lot of ways that you can still work that out. But like you said, it's a little bit higher risk, but you get a higher return as well.
Yeah, and what my point with that is you're getting into that property. It's a $200,000 property. The value of that property is $200,000. We can talk about the equity and the loans, but let's just talk about the value of the property.
Yeah,
it's $200,000. You're paying $50,000 for this non-performing note. Okay, that's your entry point, right?
Right.
Now, if you cannot get it, you're still getting that Colorado for that price. Right. And so you're essentially acquiring this property at that discounted price just by entering into the property through the note, right? Does that make sense, or am I?
Yeah, absolutely.
Together, right?
Yeah, you're taking an asset at a deep discount, and you can turn around and turn it into something beautiful too.
Right, and you're not going into foreclosure. You're not going to the foreclosure list. You're coming through an area. So let me ask you, if an investor is looking for nodes, of course, you originate nodes, but there's other, so actually back up a second. What is originating a node? What does that even mean?
Okay, I'll share with you basically just how we do. Yeah, how we do it is we buy large parcels of land and then we subdivide it. And then we owner finance those tracts. So like I've said before, you said before in the last one, we buy the full pizza and we sell by the slice. Gotcha. And so with each tract that we're dividing, then we're owner financing that property. So we become the bank because there are a lot of people, I would say over 50% can't get bought at a traditional bank. Whether they have their own business, they're a contractor, service worker, whatever it may be. Just a lot of people, unfortunately, can't get bought at a bank, but they still may have a good credit score, a significant amount of money down, things like that. So we're creating the note where we're owner financing and just being the bank essentially.
Right. And then you'll turn around and, once you've acquired the property, you've subdivided it, sometimes put a home on it, or sometimes it's just raw land. Is that correct?
That's correct.
Then you value the note, and then of course it has a value. The person has put 20% down. It's got an X interest rate. It's the purchase price is X, Y, this, and then you'll then shop that note before even the borrower makes one payment, right? You'll then sell that to a passive investor to gain the return. And in that case, you capitalize, right? Because instead of you waiting the 20-year term of collecting those payments, you're not getting all your capital back up front. Is that correct?
Right. And different notes are going to have different terms. And so going to have maybe a 5-year, going to have a 15. A lot of ours are average of 15 years. We do have a 20-year. But you can also do a partial note and not pay for that full amount and still get your return as well, which is awesome.
Yes, in the partial notes, I want to, and again, we're, for the audience and people waiting, I know we're getting deep. This was a dive into it, right? And we wanted to we do want to provide a broader one, but I think you need to understand this as an instrument, as a debt instrument, as the intricacies of notes and what the types are, right? And that's kind of we wanted to give you a deep dive into it as well, but also keep it broad too. I think there's some things that we can pin on, like partial notes, and there's certain strategies that I love that I think let's table the partial note piece. I think we can do a whole episode. Again, we always drop in teasers, right? I think the partial note aspect was something that was really mind-blowing for me, and the numbers behind it are just phenomenal. And so I want to continue. I want to talk about. Oh, go ahead.
Well, I was just going to say really quick, I had a situation recently where single mom, she's looking to invest for her and her kids. And she has, this is a whole nother area we can go into, but has a self-directed IRA. But she doesn't have our notes or anywhere from $50,000, $350,000 per note. And so she doesn't have the full amount to purchase a full note. Well, she came to me and said, I want to be able to invest. I want to work with you guys. What does that look like? But what's great is she had anywhere from around 25,000-ish or so. Well, our entry is 10,000, a minimum of 10,000. So she's still able to put that money to work and over time build that up and then start buying more notes. But she's able to buy a partial. But all that to say, her entry into buying notes was really low. And so, but as a single mom, she's getting to get an awesome return and start building that passive income coming in.
Yeah, listen, you're looking at it from a long-term view, okay?
Yeah.
As an investor, right? It's you have 10,000 to play with right now. That's what I have, right? It's sitting in your bank account or you're sitting in your IRA. It's not making any money, right? What's potential return on that money on the CD is like 6% in the bank, right? So but it's sitting there. When you make it work for you like this, right? What are so from her 10%, 10,000, what is she going to yield off of that? And it's usually based off how long the term is for the mortgage, right?
Right. I think hers was around 12%
on that. Yeah, give me the numbers on that. She put 10,000 in. She's entitled to how many payments? And what does she turn that 10,000 into? What's her yield on that? Is what I mean.
Yeah, she put in about 25,000 and was able to get a 12% return. And so she's doing that right now at 15 years. Saying that though, if she needed to cash that out, there's note buyers where you can still get your liquid cash
So how
out,
much
which is
you
great
getting
with notes.
that's so you can liquidate your note that you bought, right?
Right.
How much is she getting like a monthly off of that? Like a monthly payment that she got off of that?
You were asking me that. I was like, how much did she get monthly? I can't remember. I got to do the numbers on
No worries.
25,000, but I at 12%. But anyways, she's just getting that. Now that goes back into her self-directed IRA.
Okay.
Yeah.
But
Whether you have cash in the bank or a self-directed IRA, it doesn't matter. She's still getting that coming back to her and working for her.
Right. And, I was looking at these notes and I'm like, okay, I saw, like, for example, there's a website where they post these different notes and I was looking at some, right? And to see, okay, what do these look like? Because I'm trying to learn myself, like what the yields look like, what makes the note attractive, what I would buy, what I wouldn't buy. And, there's some that, you put 25,000 in, you're getting like a $400 or $500 payment. You're turning that into a mailbox money. And it gives you, 10%, yield over however long the term is. It was a shorter note because there's short ones or longer ones, obviously. But it's attractive to me to, if you have a chunk of money and it's just sitting there, make it work for you, turn it into just mailbox money that's coming back to you over a period of time. To me, it's just a phenomenal way to make your money work for you. Okay.
Well, and I was going to say, we work with a lot of people that are looking to retire or are retired and more on maybe a fixed type amount coming in. So we have a note right now around 250,000. Well, that's about 3,000 a month that you get in cash flow from that note. So, which is huge. And then think about, as you're adding that up over time, well, then whether it's your mortgage, car payment, I mean, by the time you're getting older, a lot of those expenses are going away. But to get a monthly cash flow of 3,000 a month and you didn't have to do anything to that, that's awesome.
It is awesome. And like you said, stacking them, right? Let's say you buy one note that's giving you $1,500 a month. You buy another note that's giving you $500 a month. You're finding these notes and you're stacking them. And you're right. I mean, eventually, they compound over time, and you just have mailbox money. I mean, I keep going back to that.
Yeah,
I love that idea.
Think about it this way. Put a name to each note as you're stacking it, and so
I like that.
Yeah,
I like that. When I get my first couple ones, I'll make sure we start naming them.
Right.
So, let me ask you this. I got a couple rapid fire questions for you. Okay, so how does the current kind of real estate market affect note investment? Because I'm hearing this is a really good time. How the market dynamics are in real estate. How does the current market affect the opportunities in note investment?
I think right now it's a great time. We're not seeing a slowdown on owner financing properties. Okay. And so being able to create notes, selling them, it's not slowing down right now because with banks tightening interest rates, there's just so many people that can't get bought at a bank. And so we owner finance that for them.
So yeah, and again, that's a great point, right? As interest rates stay high or rise even more, owner financing grows. More people looking to buy are looking for owner finance options. That creates opportunities for notes to be available, not from traditional. I mean, there's traditional kind of institutional notes available too from banks, right? Harder to come by, but the ones that really you're going to have access to, the ideal notes are the ones that seller financed notes that are being sold. And the rise in seller financing creates more opportunities in note investing.
Correct.
Did I summarize that correctly?
That's great. Said it better than me.
There you go. Hey, we put it together. We're a team here, right? So, so I do want to share, also, can you share, how do investors, and we talked a little bit about this, but, can you share how investors typically find and evaluate potential real estate note investments?
How they find? Well, really note investing. Yeah. Note investing is still I would say a smaller niche right now in the real estate realm. I mean, it's been around for years and years.
Yeah.
We know of people that have been doing it since the 80s, right? I think Eddie Speed and different people saying that. It's not as saturated as a lot of areas in real estate. So I would say starting out, just getting connected with other note investors. There's different note expos. There's different groups to get involved in. And then I know a lot of people that broker notes as well. They personally buy notes, but then they broker them. So it's just a small community in how you can get involved.
Yeah, and the second part of that question we did touch on. I mean, how do you evaluate the potential real estate note? I think, let's just to reiterate, the borrower, right? The strength of the borrower. Make sure they have a credit check on them. Make sure you know who this borrower is, because remember, you're going to be entitled to those payments. That's the person that are going to be paying, or family that's going to be paying you. So understanding how quality of that borrower is. Credit check is what? Just the report card, right? If their credit shows that they can't pay, they're not paying anybody else, don't expect them to pay you. It's not
right.
It's not, the borrower is the biggest key of this, right? If if they're not a quality borrower, then it's not a quality note, in my opinion, right? And that's probably kind of the consensus, right?
Yeah.
And it devalues the note as well. Am I correct? Like, if the borrower doesn't have, and that's why we go back to paper. If the note seller does not have this documentation in place, then it's not a strong note to acquire, right? So there's still a lot left on the table, and there's a lot of questions. The more paper you have, the more documentation you have, the things that Christo mentioned, the RMLO, the credit checks, the background checks, those type of things, the more of that you can stack up within the note, the stronger the note is. And as an investor, the more, more clarity that I have that, listen, this borrower is going to pay and this investment's going to, pay out, and I don't have to worry about foreclosing and things like that.
Right. Paperwork is key. Yeah. Make sure the T's are crossed, I's are dotted. Paperwork is key for sure.
Okay. Great. Let's leave it this. So what's one of the most, I would say, common misconception, okay, about real estate note investing that you want to debunk here today?
Misconception. Well, I think because it's not as saturated and large as other areas like multifamily, but use that one as an example. A lot of people don't think that you can make money or a lot of money purchasing notes. And so they want to go for multifamily, and sure, diversifying your portfolio is huge. I mean, that's what I love about notes too. You can do multiple things, have it all. But I just wanted to give a quick testimony. Met a guy back in around 2010. He was a engineer at NASA, made good money already, but he was looking to retire. He started purchasing notes. He was one of our very first investors and started purchasing notes. Slowly started purchasing them, getting his return. Guy, 10 years later, I mean, he's multimillionaire now. So just over time. Yeah.
It's over time, right? It's making the money work for you. They talk about it all the time. This is,
he's become a big lender now himself because he just compounded those and accumulated those over time, and he still buys them in bulk. And so I just thought that was a cool story, because we know so many people as we're accumulating and building our own portfolio of how many people just live off the notes.
Yeah, and it's almost the best kept secret in real estate, in my opinion. To me, I think my misconception with it was that that even getting involved in kind of the brokering aspect of it, or originating notes, that you need a licensing, but also too that this was reserved for big corporate funds. And only thing when I heard about notes was large capital funds and banks selling them, right? Or trading them. I thought that was just a behind the scenes kind of Wall Street type of investments. So learning that anyone can acquire a note. There's marketplaces and different places to access them, acquire them,
Right.
and then being just listen, low barrier to entry, right?
Mm-hmm.
As well, and then it's a passive investment you can walk into and day one start making money,
right,
without all the work of getting to the cash flow point. Because I want to, because when you talk about, like you said, multifamily, let's say you're building a multifamily. Listen, to get to your cash flow, you have to get it leased out, right? Or build it first, then lease it
right.
out. There's a linear long path to cash flow, right? Even in a house, if you're building a home or even wholesaling and it's vacant, you still got to get somebody in there before you can ever make any cash flow money, right?
Right.
Also, when you're actually, the property manager, you got to think about insurance, this and that. You got to make that margin. With you just holding the paper on the property, you're not worried about any of that.
Right.
The loan is set in stone. This is what's paid. This is what needs to be paid, and this is the monthly payment for that loan. That's it. That's the only thing you have to worry about is just collecting the money, right?
Right.
Now, we talked about, if it goes default and things like that, the avenues you have to take. But again, that's why when you're acquiring it first, the strength of these notes is the borrower, right?
Right.
And then I also mentioned, even if it does go default, you get the collateral, you get the home, you get the possession of it. So, I mean, there's so many different things and so many positives of investing in notes. So I do want to I think we could table it there. I do want to give you some time to add any points that we did miss or some closing remarks.
Yeah, I think most importantly, I wanted to share just why I am here and why I love what I do with the notes. Again, notes is just another avenue, which is awesome, a really awesome avenue in real estate. But we all remember 2008, right? The financial crisis was a great time to get started in a real estate business. Well, that's when we did. And it actually taught us an immeasurable just amount of knowledge as we started doing rentals. My husband and I did. We got into wholesaling, fix and flips, even hotels, and then we got into owner financing as well. But it wasn't until last year that my father-in-law, he passed away unexpectedly. And in the same month, we found out that my mother had cancer. And so right then we became caretakers on both sides. And as we're walking through this with our family, we realized it got really challenging. There was no financial plan set in place. And in fact, we were left with my father-in-law a mess, and my husband and I to pick up the pieces. So, we were going through this for a time, and as we were picking up the pieces, I'll never forget where we were. Was picking up my daughter from school in the parking lot, and see the kids coming out of the school and not a care in the world. And there's this little petite grandmother walking up and she's picking up her granddaughter. And it just hit me where it's about, just like this grandmother, just like my parents or our families, they're trying to secure income and leave a legacy. And so why I share that story with you guys is because it just gave me a deeper and motivated mission to help others as they're weathering the storm. And through notes, like you said, securing that income is huge. And also building a legacy while doing it. And so that's why we do what we do and why we love it. And you do get your above average returns like you talked about. You get to, as an investor, diversify your portfolio. And then you also get to have cash flow immediately, which is huge. And until you have that cash flow coming in, where's the freedom? And so I guess for me personally, my freedom is being with my family, my children, my husband. So notes make that happen.
Yeah, that's so powerful. Thank you so much, Crystal, for sharing that. And I think my opinion now is you're right. More families need to know about this. More families need to secure their legacies and their financial freedoms with note investing. You know, and if I can do it for my family, you're doing it for your family, but others' families can do this as well. Like we said, it's not a big barrier to entry,
Right.
And you can buy small notes, you can buy big notes, but I think again, there's not enough light shed on this. Sometimes these strategies in real estate are reserved and they're kind of kept in pocket, I think, right?
Yeah.
And not to the public, right? And I think you can work together and spread the message that this is an avenue for folks, and it's a safer avenue. It's a less intensive avenue for folks, right? And so I think
Right.
that's a mission that we'll carry and a torch that we can carry together. And I do thank you so much for sharing that, because that just changed my sense too. I'm like, you know what? More families should have this. My family should have this.
Right.
Everyone deserves that freedom. And we're in a rat race, and the truth is, it's not getting better, and it won't get better.
Right.
Inflation. I mean, everything. Things that you bought at the supermarket a year ago are double the price.
Right.
Our everyday necessities are costing.
Right.
And so to be able to secure and sit at the other side of the table, usually it's only the banks that are reserved and able to collect this type of returns.
Right.
But if you can step into that chair and get into the other side of the table, it's powerful. And like you said, it could help you leave a long-standing legacy for your family.
Absolutely.
I love it.
That was so good.
I think we end there. Thank you for tuning in to episode 2 of the Investors Corner with Crystal and Aneel. Check us out. We'll be right now our videos are posted on my YouTube. We'll be creating another YouTube and Rumble soon for the podcast. But right now it is available on Spotify. And we'll share. We have some upcoming guests coming up, I think, in the next couple of weeks. I'll share some info on that soon. And thanks again for watching and tuning in to the Investors Corner with Crystal and Aneel.
Thank you, guys. Thanks, Aneel. See ya.